What's up, everyone? I hope you are all having a fantastic day. To get us started on today's video is a clip shared by Finance-A-Lot on his Twitter feed. Dr. Lacey Hunt speaks on the history of inflation and how it has affected us thus far. Lacey Harris Hunt is a well-known economist and executive vice president of Hoisington Investment Management Company. He is a vice chairman of HIMCO's Strategic Investment Policy Committee and chief economist for the Wasatch Hoisington Treasury Bond Fund.
They really had lost sight of business cycle experience and theory, because in an early stage expansion, the inflation rate needs to come down.
Mm-hmm.
And they thought that letting the inflation rate go up would be beneficial. And there's no question that there are certain parts of our economy that did benefit, unquestionably. But the issue is not whether 15% or 10% were made a lot better off. The issue is what happened to the majority of your households in the inflation.
That's right.
And they were absolutely clocked. And so the Federal Reserve, in conjunction with the melding of monetary and fiscal policy, produced these counterproductive results. And now the Federal Reserve is going to have to try to reverse it by tapering and possibly raising the rates. And in fact, the odds of making that work, if the empirical odds are not good. In fact, the Federal Reserve's record is quite checkered. We hang off their words, we react to them. They can make some surprise statement that can cause all kinds of volatility. But the fact of the matter is, these various pronouncements and the actions by the Federal Reserve have destabilized the economy. We've gotten worse results, not better results.
We've become much more volatile.
Much more volatile.
And, at the rate at which the yield curve is compressing, I mean, it would be the opposite of the not QE moment when the Fed forcibly uninverted the yield curve when it stepped in and started buying short paper. It uninverted that 210 yield curve. This would be the opposite. They would be inverting the yield curve if given that it's the spread between the two is only 80 basis points right now, 79, 80 basis points. If the taper continues at an accelerated rate, I heard one economist say we might see the first rate hike in March of 2022. That the Fed will invert the yield curve.
As always, welcome back to Moneyside, your favorite crypto news channel. If you're new here, welcome to the XRP Army. Hit that subscribe button and turn on notifications. That way you don't miss out on our daily crypto news updates. In more interesting news today, we've got this update from Wall Street Silver. And in my opinion, this video sounds a little bit creepy. They don't want the public to see this video. The bankers don't trust the banks. November 2022, they're talking about the financial crisis, their lack of faith in our banking system, and how to keep the public from freaking out, the Federal Deposit Insurance Corporation. And as we all know, they wouldn't want to see it and freak you out if they had written in the bail-in language. To get you up to speed, bail-ins help a financial institution on the brink of failure by requiring the cancellations of debts owed to creditors and depositors. Bail-ins and bailouts are both resolution schemes used in distressed situations. Bailouts help keep creditors from losses, while bail-ins mandate creditors take possession. If you think our financial system is stable, now think again. Just listen in. In another update from Rob Keentz, we can see that the Australian Mint can't keep up with the demand for gold. According to the Australian Mint's chief executive, Gerhard Starsich, at the moment, every gold coin that comes off the coining press has already been sold. Right now, they are selling 3 times as many as they're able to produce.
It should be accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. So they just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do, that we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in, they get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that will charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
There has been a crazy gold buying binge going on. It's a notable market event, as the last time this level of buying was seen marked a historical turning point for the global monetary system. That was back in 1977, when European central banks bought massive volumes of gold from the U.S., leading to a run on the price and the collapse of the London gold pool of reserves. That hastened the eventual demise of the Bretton Woods system that tied the U.S. dollar's value to the precious metal. If that's to go by, we are at the blink of the collapse of the current financial system and the rise of the new financial era. On to some interesting scoops now about Ripple and XRP. We have a clip of David Schwartz shared by RSB on Twitter, captioned, and this is why XRP is the only asset you should be investing in right now. An up-to-date payment technology network below 50 cents. The sky is not even the limit.
We have the technology to allow every financial institution on the planet to settle with every other financial institution in a compatible jurisdiction in any asset in seconds for less than a penny. Just think about this. Anyone who's made a payment knows that we're nowhere near that today. But imagine every financial institution settling with every other financial institution in seconds for less than a penny, any asset. That's fundamentally transformative. We have the technology to do it. Now we just need to figure out how to drive the adoption. And of course, there's all the challenges with its incumbents, there's regulation, there's inertia, there's the big players who are really trying to defend, if you're one of the largest banks in the world, you want to push pause or stop on technology. Because you're in the lead. So of course, you say you love technology, but obviously, wish you could stop it. So,
and now as we wind down on today's video, we've got an interesting clip that was shared by Ripple. As we can see, Novati Payments is using Ripple solutions to make cross-border payments faster, simpler, and more secure.
If you look at some of the disruption in payments and financial services, part of it is about just becoming a participant and breaking the shackles of traditional banking or traditional networks, being able to compress commercial relationships that, say, the banks have been able to build for 40 or 50 years. Disruption is not just about technology, but it's about becoming a part of an ecosystem, being able to participate. Yes, Peter Cook, I'm the CEO of Novati Group Limited. We've been listed on the Australian Stock Exchange for about 6 years and have been a partner in RippleNet for about 2 years. Our customers break into two, other fintechs, banks, financial intermediaries, where we are primarily providing an infrastructure layer or ecosystem for them to enable them to further their financial services and payments. And then we've got many hundreds of end merchants and our businesses that use us to complete payments, whether it be issuing, acquiring, or cross-border payment services. So our clients are B2B payments companies. So essentially right through that consumer to business to RippleNet network through to the final receiving party, we're getting faster transactions. We pride ourselves on having financial services licenses in a number of jurisdictions, and actually right at the moment are in the final stages of getting a bank license in Australia. We can use our licenses, we can use our tech, we can use our market position, join with RippleNet and meet others that are in similar positions and create a super network effect.
As always, please do your own research and always trade safely, guys. Please keep in mind we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You can always let us know what you think in the comment section below and start up a conversation. Thanks as always for watching. Couldn't be here without you. Don't forget to like this video and please click on that subscribe button below and turn on notifications. That way you'll get informed whenever we post our amazing content. Thanks again, and we will see you on the next Money Side.